Right, hello. Welcome to today's Trend Signal Trading podcast. It's the 6th of July 2020. My name is Adrian Boothie. I'm the head of trading here at Trend Signal. I'm joined as ever with our chief analyst and CEO, Jerry Miller. Hi, Jerry.
Morning all. Hello. Hi.
So today, what we're going to do is a bit of a recap on the over the last week, what's been going on in the markets and what to be looking out for the week ahead, as we're seeing COVID cases rising, particularly in the States. We're seeing lockdowns starting, but they're not kind of starting. We're seeing stocks rise, and also we're seeing the likelihood of a V-shaped recovery rising as well, arguably, despite the backdrop of COVID cases rising as well. So, Jerry, do you want to try and make some sense of what's been going on and just give us an update? Maybe why don't we start off with what's happening this morning? Bit of a rally in the Far Eastern markets, wasn't there?
Yeah, it's extraordinary. I went to bed thinking, yeah, don't like what's happening in Australia. There's cases of further lockdowns in Galicia and Catalonia in Spain. Germany's got lockdowns. As I said, Victoria, well, Melbourne, closed the border between Melbourne and Victoria and New South Wales or wherever. Anyway, the fact that they've done it is quite sort of a headline. So things sort of seemed a little bit somber, really, when I crashed out last night. And he's find out that overnight there was a big, huge rally in Chinese shares and Hong Kong shares as well. And that really sort of set the tone this morning. Extraordinary.
So what was the reason for the big rally then?
Do you know, retail investors piled into technology shares. It was a big, big move. And it seems to have been an article in this magazine or newspaper called the Securities Journal, and as most things are in China, it's run by the state, so it really is what the state believes and wants its population to understand. And effectively the article encouraged readers to buy shares, and it talked about the wealth effect of the capital markets and a bull run in the markets, and I think that really was the catalyst that sent the shares absolutely flying. And I think come the close, I think the CSI 300, so that's the top 300 shares on the Shanghai and Shenzhen exchanges, they rallied over 5%, which is huge.
Quite a rally, isn't it?
Yeah, no, it's huge.
Like sounds like the sort of article Donald Trump would write, to be honest.
Yeah,
the markets.
At least we know that. Yeah, well, actually, we know it's a state sort of institution, so the magazine. So it's very much a message conveyed by the Chinese state to its people by the market. That's effectively what they were saying. But yeah, you're quite right. It's the sort of thing that Trump might tweet. Life is good. We've tackled the COVID virus. Everything's fine.
Buy stock.
Yeah, I'm great. Re-elect me. Sadly,
4 more years. Yeah,
that's 4 more. That's not happening at the moment. But anyway, yeah, it wasn't just the CSI 300, which again, you know, we have to talk more about China, because the Chinese markets and the Chinese economy has a bigger and bigger effect on our markets. So it's something that is becoming more of a feature first thing in the morning when we talk about what's pushing European shares up or down. And it's not just talking about the Dow and the S&Ps, but it's what China's done overnight. And you know, it does have a big effect. So that sort of obviously pulled the Hang Seng higher as well, and that registered a gain of 3.5%. Another market that's now in a bull market, having rallied more than 20% from its lows. So you know,
so that's the definition of a bull market. So 20% off its lows for a bull market, 20% off its highs for a bear market, isn't it? Correction was 10% off its highs, wasn't it?
But I mean, you look at the US, that's 25% higher. There's so many markets have bounced hugely, absolutely big time. Other markets also followed suit. So the Nikkei, that was up 1.3%. But as I said, you could have forgiven yourself for thinking you were going to be looking at markets that would be down when you woke up in the morning. But
well, how many times have we thought that? No, it's interesting. You make an interesting point earlier about how, you know, it seems to be less of a focus on what the Far East was doing, because usually the Far East would follow what the US had done, and then it was playing sort of catch up from the previous session in the States. Whereas now it seems to have its own sort of existence and sort of, I don't know, message, which it probably has had less of in the past.
Well, certainly, if you think about it, over the last 20 years, there's been quite a focus on Hong Kong in the press with this new security law and all that stuff. But I've been reliably told by my daughter who lives in Hong Kong, that life there's pretty okay. If anything, a lot of sectors of the economy are quite happy that there aren't people demonstrating every bloody day, which has disrupted the economy significantly last year.
Mm.
Yeah, I mean, Hong Kong, when the Chinese had took control of it again back in 1997, was a fifth of the Chinese economy. So that it represented 20% of the overall Chinese economy. It's a measure of how far the Chinese economy has grown, not what's happened to the Hong Kong economy, but now the Hong Kong economy is about a 30th of the size of the Chinese economy.
Wow.
So,
That's huge change.
you know, and the Hong Kong economy has grown significantly as well, but it just goes to show you sort of the chart for the growth in the Chinese economy is huge. It's
Yeah.
huge.
So there's been quite a bit of talk of more likelihood of a V-shaped recovery, and yet the cases of the coronavirus in the States, and like you mentioned earlier with Australia and Europe, is starting to pick up a little bit. I know that certainly in my my town of Northampton, they were opening the pubs up on Saturday. But I know that the police, because in Leicester they were actually not reopening them, I believe that
Yeah.
might have done the similar sort of thing in Milton Keynes, and the police were going to be stopping and interviewing everyone that was trying to travel into Northampton from Leicester on Saturday nights to find out what they were doing, why they were coming in, and so on, because
Right.
lockdowns in force. And just goes to show that, you know, it isn't that rosy out there, and yet this stock
Right.
market seems to paint a slightly different picture if that's all you were to look at.
Well, it's as we've discussed in previous podcasts and discussions, the stock market is not the economy. The
No.
stock market is a view of investors for various reasons, you know, supported by central banks and government spending tons of cash, no other place to put your money and all that sort of stuff. We've discussed all that before.
Mm.
But you're right, there is a lot of reinfections happening, but I think they're all localized. And I think certainly most economists, most countries are pretty effective, or a lot more effective at, first of all, identifying them and locking them down, like we are doing with Leicester, like they're doing in places in Spain. But also we're a lot better at treating them. And this is the thing that's happening in the US. While the infection rate doesn't seem to be slowing appreciably. If anything, you know, it's about 50,000 new cases a day, which is huge. Bearing in mind our new cases are sort of 500 or less a day.
Yeah.
But you know, you've got a lot of southern states that jumped the gun a little bit too early, we should say, and now I think counting the costs as they're having to lock it down. And I think the mortality rate in the US is curiously low as well. And I was trying to make head or tail of it, and it seems that a lot of the infections are in the younger age brackets. But hospital admissions have been rising sharply. But I think the markets really are happy with it, with the way it is at the moment. But I think if there was a sudden jump in COVID deaths that led to moves to tighten the lockdown measures, I think that's what would put it into more of a tailspin, Adrian.
Well, we've talked in the past about how just because lockdown's lifted doesn't mean that certainly the elder population is going to be rushing to the pubs to get out there. They're probably going to still be quite cautious, and maybe that's the thing. A lot of the people going out, even though the lifting of it, are the younger generation anyway, which kind of makes sense.
Well, you were talking about the pubs in Northampton. I was actually down in Devon on Saturday to visit my sister-in-law, who has been, you know, isolating really. She like my wife has to take drugs to control you know, her breathing difficulties. I'm trying to think what it's called.
Asthma.
Asthma. That's what I was thinking of. And it's just a drug that makes you susceptible to it, and they just recommend if you're taking it that you've got to be extra careful. But down in Devon, there's a lot of, how can I put it, older people, and I have to say, I wouldn't go near a pub. That's not what I want to do at the moment. But the pubs just didn't look busy at all, Adrian. I mean, admittedly, it was chucking it down with rain, so you can't drink outside. Would you want to go inside into a hot, steamy pub? I don't think so. You know,
Doesn't sound that appealing.
no, it doesn't. It doesn't.
This is all
It doesn't.
going on either.
But but I think there is, the press relish in delight in sort of showing us pictures of pubs with lots of people crowding on the streets and everything else. But there are so many. That's 1 in 100. That's 1 in 10, 1 in 20. Most pubs did it sensibly, and people who went for a drink were sensible.
Mm.
So, and the police stated the obvious thing. Yeah, people when they're drunk won't follow social distancing rules, but not many people went out to get drunk. I mean, let's face it. You can get drunk at home. That's what we've all been doing. Sorry, we haven't been getting
Yeah,
drunk, but we've been drinking at home. So,
yeah,
it's not as if we haven't been drinking all this time.
yeah, absolutely. Okay, so why don't we have a quick review on the markets? So FTSE pretty much unchanged, but quite strong in the States, Jerry, last week.
Yeah, we had some good numbers in the States, Adrian, last week. If you remember that CB consumer sentiment
Yeah,
number was pretty strong, which was very, very, very positive. Um, Pending home sales, that was the other one. I was trying to remember what it was, but the pending home sales is huge, wasn't it? Look at that,
yeah, that was something that
44.3.
kind of kicked it all off on Monday last
Yeah,
week, wasn't it? And
yeah,
so we were doing that round the clock trader session Monday and Tuesday last week, morning and afternoon, and
yeah,
really did inject some life into the stock market because that was
yeah.
significantly high. And of
It
course,
did.
that's a real sense of positivity. And we've seen that actually in today, where, I forget which house builder is, Barrett's maybe, can't remember which
Barrett's,
one,
yeah, it is
has
Barrett's,
come out
yeah.
and said that their number of registrations is pretty much around, not far off the same levels as last year now. So house builders it's a real positive thing as well, because if you're going to be buying a house, it means you're going to be buying all sorts of other stuff as
Yeah,
well. Which
absolutely. And that's why you're getting, we'll get onto it in a second, but Rishi Sunak, the Chancellor of the Exchequer, is talking about cutting stamp duty, which will be a big, if you bring forward or encourage people to buy properties, it results in so many additional purchases, and that's what we need as an economy. We need people spending money on those things, and they're talking about uh, cutting stamp duty for property purchases up to £500,000, which would be significant. I was trying to work it out before we started this, but it looks like for a £500,000 property, that means a saving of £15,000.
yeah,
So
that's
quite significant.
significant. It's funny though, because things like the Help to Buy scheme, I can't help but think all that does is line the pockets of the
It does.
house builder himself,
It just
because
pushes the
I don't
prices up.
actually, just push the prices up. So this is only, but then, that's something you only really pay that price over the next 30 years, don't you, with your mortgage, rather than necessarily right now. But even so, I just hope it's
Well,
something
that's
that actually the consumer can benefit from.
yeah. No, it needs to be more targeted. I think you're right on the Help to Buy. It sort of helps the house seller as well as the house buyer, which
I
where
guess it's a
stamp.
cash sum, isn't it? It's a big lump of money that if you're going to be paying that in stamp duty, you're then not able to buy the other things that you'll need, so you'll delay. So
Mm.
cash is important, isn't it? If you're struggling for a deposit, suddenly it
I mean, you could
makes it more
say,
likely.
cutting stamp duty will enable you to pay more for a property, of course. So it's sort of, you could argue it the same way with stamp duty, but I think it's more targeted. But yeah, we'll see. But it wasn't.
Mm.
Yeah, sort of going back to the markets, Adrian. So the US markets did well, but the UK markets and European markets, certainly the UK markets, I think they were sort of hampered by the. Weirdly, we were talking about this time last week about how poorly sterling had performed, and of course, sterling has been a little bit volatile, as we know. And the rally in sterling, I think, rather made it sort of quite heavy going for the FTSE 100 and the 250.
Can you
And
explain that for just a second as to why a rise in the pound might make it harder for stocks, Jerry?
well, it's just that overseas buyers. So if you're in the US or in the EU and the Eurozone in euros or dollars, it makes the UK look more expensive just purely because of the currency translation. So with sterling rallying, it makes shares look more expensive. So you're not likely to buy as after a currency appreciation has made them more expensive anyway. So a stronger sterling just it tends to hamper more the FTSE 100 than the 250, and also of course you might say they also benefit from their overseas earnings as well, but that also is a cost to the companies. So yeah. To
Yeah, I
more
mean,
than double.
certainly it's to get a lot of these companies are if they're reporting in pounds and they're a net exporter, which a lot of FTSE 100 companies are, is global companies. This obviously makes their exports more expensive,
Correct.
relatively. So that's also a
And
big issue.
the revenue they bring in less in
Yeah,
sterling.
exactly.
Yeah,
Yeah.
yeah. And
Okay.
obviously we had
Yeah.
Andy Haldane as well, just before we get on to
Mm.
the next bit. Remember the economist of the Bank of England came out and said he thinks the economy is doing better than the Bank of England predicted, was expecting, and that he's predicting a V-shaped recovery. And that really caused a few open mouths actually from some quarters. But he's quite an astute sort of performer actually, Andy Haldane. So I think that gave the markets, well, certainly gave sterling a bit of a lift, that's for sure.
Yeah, but also sterling was up about 1.25% on the week, but pretty flat on
Yeah,
the euro, pretty flat on the dollar yen
yeah,
as well,
yeah,
wasn't it?
yeah. No, sterling is the one. It is the one. The rest of the market, foreign exchange markets, a little bit quiet, but yeah, just sterling just made. Well, really, you might turn around and say, well, sterling hasn't done much over 2 weeks because it fell more than that the previous week, and it just sort of made most of it up last week. But
Yeah.
I think the volatility has nothing to do with it. Some people sort of trying to call it an emerging currency. It's not. It's just the fact that the UK is grappling with two things: the effects of the pandemic, which has hit the UK economy and and in terms of the COVID effects, the number of deaths, etc., harder than a lot of other countries. And obviously, we've got the uncertainty surrounding the Brexit negotiations.
Yeah.
Yep, they're back. The Brexit
Yeah.
negotiations.
Yay. But I guess
Yay.
that it just makes it more interesting, doesn't it? And that's you're going to create more volatility than everything else, which has got a kind of a similar situation going on. They've
Correct.
all got
Correct.
extremely low rates. We're all struggling with COVID, but we've got this added
Yeah.
Brexit thing thrown into
No,
the mix there, which makes
no,
it
I
more.
know. I know a lot of traders who are trading sterling pairs because they're a lot more interesting. There you go.
Mm.
Volatility.
Okay. What about the commodities? So quite strong on the stock market last week. So you kind of expect that, relatively flat then, or for gold as well. It had a strong start to the week, but sort of pulled back a touch, didn't it?
Yeah, it sort of is following the stock market. Sorry, not gold. Oil is gold. Gold really had a flat-ish week. I think it's just paused a little bit. I think it was sort of the risk-on move last week dampened down most of the buying. I mean, it was up. I think gold was up like $4 in the end last week.
Yeah.
Obviously, US holiday on Friday meant it was going to be fairly flat. But yeah, I mean, it defies gravity, gold, as far as I'm concerned. You wouldn't normally see a stock market rally the way it has done, and gold as a risk haven also go up. It's sort of
Mm.
one of them's going to be wrong in the long run, Adrian.
Yeah. Yeah. And oil been rising quite strongly, and of course,
Yeah.
that's relatively following the stock market as you mentioned earlier. But of course, it's a resource. There's a lot of the biggest companies in the world, or perhaps there used to be, are oil companies: Shell, BP, ExxonMobil,
Well,
etc.
if yeah, if you remember last week, we were talking about Shell, talking about writing down its assets by, what was it, $22 billion. BP has written down its assets not by the same amount, but quite a lot. And I think these big oil majors are coming to realize that we're on a bit of the downward slope longer term now. And if anything, the COVID-19 pandemic has accelerated a lot of the moves into renewable energy. And it's something that certainly BP is looking to embrace. It's sold its petrochemicals industries to Ineos. So it's a long haul, this, but my suspicions are that the connection with the stock market may decouple eventually. But for now,
Yeah.
oil is looking like it's almost mirroring all of the moves in the stock market now. So stocks improve. The assumption is the economy is doing better. The economy is doing better. People are going to be buying more oil. They're going to be commuting more. They're going to be driving more. They're going to be making more products. Factories are going to be busier, etc., etc. But remember, the stock market not the real market.
Mm.
So we'll have to wait and see exactly how this recovery pans out. But there's a lot of unknowns at the moment, and I think certainly with consumption and production really. But look at it now.
Yeah, I
$3.
think another big unknown. If you think about how much petrol you've used over the last sort of 12 weeks just from working at home rather than the sort of just the daily commute. There's a lot of companies and a lot of people that I speak to whose work from home pattern will change. A lot of companies were very much against it, but actually a lot of companies have proved to themselves, actually, do you know what, we can actually do? We can do working from home. It's not the big risk that we thought it was. It's been okay. And if that means that people then start doing maybe 2 or 3 days a week in the office instead of 5 days, and of course that's going to have a big impact on the demand for oil, isn't it?
Oh, huge,
It's going to have a
huge.
big impact on property, certainly commercial property in places like London, because I know people who work in London who actually will now be looking to work from home, and will they need the biggest shiny office in London anymore? They probably don't need one quite as big.
Well, so people living in London are
It'll be
thinking,
interesting.
what, if I don't need to commute to an office, i.e., why am I in London to get to my office in London when I don't need to get to my office in London? I think I prefer to sell my overpriced flat in London and buy, a decent sort of 3-bed house somewhere with a garden where I can enjoy life a bit more.
Yeah, it's going to be fascinating how it all plays out over the next few years. And of course, a lot of business travel, or I must travel to business, do face-to-face meetings. But of course, companies like Zoom have been, flying. And you sort of wonder just how much things are going to change because of this.
Well, it's been forced on us, and it's something that as business people, perhaps our company, Adrian, we may not have decided to test whether we could work from home, whether we'd want to conduct meetings over Zoom or Microsoft Teams or whatever tool we're using. But actually, it's worked, and this is what companies have proved. And I think, was it Fujitsu over the weekend?
The deep end, don't you, almost to some of these things?
Well, yeah, that's when you're forced to do something. You suddenly realize, gosh, it wasn't so bad after all. But there are some companies that are just basically saying, no, you can work from home now. And a big Japanese company, I think it was Fujitsu, I can't remember, but announced over the weekend that that's exactly what they would be doing. And I think this is giving a big headache to all those funds that invest in property. Just looking pretty dire at the moment. Certainly the big metropolitan office blocks, etc. It just doesn't look. The numbers don't look good there. That's for sure. But it's going to affect us all because we've probably all got some of our pension money invested in those vehicles. So.
Yeah, absolutely. I'm sure we do. Well, it's something I was looking at with my mum to get a reasonable yield on it, but 4 or 5% yield doesn't make much cop when your capital's been hammered by, I don't know how much it's been hammered by, 50%. I know some funds actually just stopped, haven't they? Stopped trading, sort of cancelled.
Well, they're gated, aren't they?
Yeah.
But, well, I think they just have to be for now, whilst the market's so uncertain.
Yeah. Okay. Look, let's move on a touch. We've talked a little bit about in the past about Trump and how he's not doing particularly well. And of course, this is not a political podcast, but we have to try and bring this back to the equity markets. I mean, that's something that he continues to not do so well. So, Jerry, quick update on the polls. What is it? Sort of 10 to 15% ahead?
Yeah, it's not improving. And I think the reason why it's not improving is because it's all down to the COVID-19 pandemic. The infection rate is not Trump's friend. He focuses on the stock market, and the stock market is doing well. But that's not what the pollsters say the populace is focusing on. They're focusing on the mismanagement of the COVID-19 crisis and the unrest following the death of George Floyd. And that's really what's hitting Trump. And Biden, Sleepy Joe, whatever Trump wants to, insult him with, is probably 10, 15 points in the lead. One poll I read over the weekend, or coming up to the weekend, gave Biden more than 20 points over Trump, which is extraordinary. And look at Florida, which is a key battleground. And according to one polling company, I think it was Real Clear Politics, Biden leads Trump by 5 points. And you might say, well, hang on a second, I thought you said it was 10 to 15 points. Florida is a marginal. It's a key state and it's a marginal state, and whoever wins that pretty much wins the White House. And it's without states like Florida, Trump won't win the presidential election. So the fact that Biden is 5 points ahead in Florida is not good news. Even worse news, Adrian, is the fact that they're having to reinstate a lot of the
Yeah,
lockdown measures.
yeah,
Trump doesn't want to hear it. And you can Twitter all you
absolutely.
like in the middle of the
Yeah,
night, Mr. Trump,
yeah.
but
Well,
he ain't going to change that on the ground.
what was it you said there about? Is it 30,000 or 50,000 new cases a day in the States? I mean, about 11 or
50,000
12. Yeah, about 11 or 12,000
in Florida.
over the weekend each day in Florida.
That's right.
That's
That's right.
huge. Huge
I
numbers.
just think
And
it's
of course,
bad.
this is important because of the stock market, isn't it? Because the idea is, Trump is this sort of guy who's going to, have a very strong stock market. The idea being, for making this back to trading, is that if Biden's more likely to come in, then we might start to see stocks slide a little bit because he's going to be less business loving, arguably.
Yeah, sure. I mean, there were two articles actually I think one in the Economist, one in the Financial Times over the weekend, both focusing on the fact that Trump was behind in the polls. And I think one of the articles, I can't remember which one, was suggesting the markets may have to start discounting the likelihood of a Democrat victory in the presidential elections in the third week in November, which
Yeah,
really, when you go back to the beginning of the year, before BC, before COVID, January BC, I think you'd think that was pretty remote, wouldn't you? Certainly, he was
yeah,
ahead in the polls and ahead in the bookmakers, but really, the White House has handled it badly, and it continues to reflect on the White House as well. The fact that these infection rates are not going down, death rates, that's another thing. Affecting the stock market, that's another thing. But irony is, if Trump doesn't get in and Biden does, that's the bigger effect on the stock market than an increase in the death rate, if you know what I mean.
yeah.
Ironically.
Yeah, absolutely. Okay, and what about the dollar? How do you think that? I mean, it's probably a little unclear, but how do you think that might be impacted if Biden's more likely to win?
Do you know, it is unclear. I mean, obviously, with markets going up again and this risk-on move where investors are buying equities, normally the dollar takes a bit of a back seat and tends to slide, especially as the Fed have cut rates to record lows in reaction to the pandemic. It doesn't hold, though, that if Biden gets in, stock markets will come off and the dollar will rally, though. It's possible if Biden comes in that the stock markets will struggle and also the dollar will struggle as well. So it sounds like the dollar is going to struggle either way, largely because of the interest rate differential change over the last 4 months.
Yeah. Okay, so shares could be interesting with Biden. What about the valuations at the moment? I mean, we're seeing, stock markets returning to previous levels, and yet earnings, can they actually back this up, Jerry?
Well, that's right. So stock markets, we know how far they've moved. We're not a million miles away from all-time highs in the US. They've had their best quarter, so that's the last 3 months in 22 years. Valuations, though, are the most expensive in 2 decades. So when we talk about valuations, we're talking about the price to earnings. So what supports the price of a share is the fact that the owner gets paid back for owning those shares in earnings, and it's do those valuations are they backed up by these earnings to come? And we'll find out soon. But forward valuations have expanded considerably faster than the market has rallied. So they've gone from something like 16.5 times earnings. So that's what it was, previously, at the trough. It's now 25 times estimated profits, and that's quite a rich sort of multiple. So let's just say if you bought a share and you got 25 times the earnings, it would basically take you 25 years to get your money back holding those shares, in very crude terms. I know there are other things at play as well, but the earnings estimates suggested by analysts are just guesswork at the moment as well. So we've got we're going into what's called the second quarter earnings season in about a couple of weeks' time, where the first companies announce their results for the previous quarter, and we don't have an idea really much about what their earnings are going to be. So it's all a bit of a sort of guesswork, because most companies, basically, because the SEC said that the companies could do this, they didn't give any guidance. They couldn't give any guidance because they didn't know what was happening. So
Yeah.
the companies haven't given guidance. The analysts can't tell you what's going to happen because the companies haven't given guidance. And all this is supposed to underpin the stock market.
Yeah, I mean, we've seen with the sort of crazy numbers that have been the economic data that's been coming out, and just how difficult it's been to forecast that. I mean, like the non-farm payroll number last week, for example. The whole thing with stocks, where it's actually significantly less visible. It's going to be all over the place, I would expect.
Yeah, no, I agree. And it's just that I got a feeling that the markets are going to take it in their stride. The markets tend to do well over the earnings season because analysts tend to sort of pour a bit of cold water on it and say, well, it may not be that brilliant, but most people know, most investors know, most traders know. Where else are you going to put your money, Adrian?
Yeah.
We've talked about it so many times, but you've got the government and the central bank backing you up. They're telling you, well, it's a bit like the US, it's a bit like the Chinese state, the Securities Journal. They're telling you to buy the market. That's
exactly.
Indirectly that's what the SEC, that's what the US government and that's what the Federal Reserve are telling investors to do. Buy the stock market.
Sounds like a bubble to me. Doesn't quite sound right, does it? But
it's only a bubble till it pops.
Yeah. We'll see. Okay, let's quickly go through the data for the week ahead then, Jerry. So I know it's quite a quiet week. Usually after the non-farm payroll week, it's pretty quiet. But anything quickly to look at from last week? We obviously saw quite a big number for the employment change last week.
Yeah, the employment change, again, it's just guesswork what these numbers are. The fact is, the US economy has improved. It is clearly experiencing a V-shaped recovery. Some very big names have thrown their hat into the ring for the V-shaped recovery, and that's basically what's happening. But if you think about it, Adrian, the damage looked severe with the lockdown, and the lockdown was a self-inflicted wound. Economies deliberately chose to stop working. That's the effect. And as soon as the risk or the potential for further damage to the economy through the spreading of this virus was over, it is even in America supposedly, then economists were able to open up, ease their lockdown measures, and they're doing a lot of things with fiscal and central bank, monetary policies that are supporting their economies significantly, and that's the reason why we're seeing some incredibly strong numbers. And that unemployment or employment number, the non-farm employment change, was huge, very positive. So end of a good week, wasn't it?
Yeah, absolutely it was. What about for the week ahead? We've probably got a couple of minutes just to whiz through this because there's not a lot.
I'll be very quick then. There isn't stuff that is also significant. Is actually not on that calendar. You've got the Brexit talks. We spoke about that earlier on, Adrian. Michel Barnier, the EU Brexit negotiator, said that serious divergences remain. Gosh, it's like a worn-out record, isn't it? And the EU needed its position to be better understood and respected by Britain. I wonder whether David Frost, the UK negotiator, thinks the other way round. I'm sure he does, that the EU needs to better understand the position and respect the position from Britain.
I'm going to make an outlandish prediction that we'll come to an agreement on the last day of the deadline, and whenever that happens to be.
How outrageous. How dare you think they're going to do it in the last minute? Shame on you. Yes, what a good call that will be. US, we got the ISM non-manufacturing PMI. Let's throw in two mnemonics at the same time. The Institute of Supply Management Non-Manufacturing Purchasing Managers Index. In short, it's going to tell us what's happening with the services sector in the US. And anything above 50 is expansion. Look at that expectation, 50. Look where it got down to. Look on that. Click on the graph, Adrian. You can just see how horrendous that was. Look at one expectation was down at sort of 35. It wasn't quite as bad, but 50. It's that's what we mean about a V-shaped recovery. It's straight back up. So close to expansion. What a turnaround!
Amazing.
Yeah.
Okay,
Tuesday,
anything else? Yep.
Tuesday, we've got the Reserve Bank of Australia monthly policy meeting. No change expected there. I think especially with this outbreak of infections in Victoria, so they won't be doing anything there. I know that the Aussie dollar has just been spectacular in the way it's recovered. I went to Australia in early February this year. Just got away with the skin of my teeth, but the Aussie dollar against sterling was around sort of 195, 202, and it's now what, 180. So I just know that the Aussie dollar is flying, so it probably should be, but not if this spreads, that's for sure. Industrial production from Germany on Tuesday. It's ranked as a low impact number, but it's been quite interesting for the powerhouse in the Eurozone, the industrial powerhouse. It'd be interesting to see what the industrial production numbers in Germany are. I know we had a slightly disappointing number from Germany today already, but it will affect the Eurozone and the Euro and the likes of the DAX and the Euro stocks. So yeah, there we go. Early doors on Tuesday. So that's the number we'll be looking at. Wednesday, we've already discussed Mr. Rishi Sunak, our Chancellor of the Exchequer, and what he's going to be doing, this budget statement. We've got the EU meeting. I don't want to talk about that. That's ahead of a summit next week. We've got crude oil inventories on Wednesday, usual weekly data, so not much point commenting on it any more than it remains quite sort of interesting, certainly for the domestic oil in the States, US oil or WTI. Thursday, just focus on the initial jobless claims, Adrian, that make up the monthly non-farm payroll. We've explained the difference. We won't go into that again, but those are people who file for claims, not the same as the jobless rate. Obviously, it's just people claiming who then subsequently will go on. Correct. Who will subsequently, no doubt, go back to work at some stage. So they will no longer be a new claim. Or won't be a claim. That's it for Thursday, and then Friday, just one number. So it's a very, very quiet week, I'm afraid, but we've got something called the core PPI. This is a producer price index. This is the cost of goods and services going into production. So a factory's sort of raw materials, let's put it very simply. And if they're going up, then the cost of goods coming out the other end is going to go up, which could lead to inflation. Well, guess what? Absolutely no chance of any inflation. We know the inflation is very benign anyway, but you can see the PPI is very benign. So the likelihood of any inflation and then in the near future is fairly remote. Okay. That's it.
There we go. There we go. That's it for the week. So what I'm quickly going to do, guys, is just say a couple of bits about other stuff that we've got going on this week. One thing I would like to ask is whether you'd be interested in sharing some feedback about the Trend Signal Trading Podcast. If you would, please do me a favor and just type an email to info@trend-signal.com. Just put podcast in the subject line. Let us know how you feel about the podcast, perhaps any subject matter you might like us to cover off on, and also on the medium of your choice, whether it's Spotify, iTunes, YouTube. Just give us a like or a rating or a review or anything like that. That would be fantastic and well received. We really would appreciate that. Just to make sure, the funny thing about a podcast is we're talking to ourselves rather than people listening all the time. So feedback can always be a little bit difficult. So if you could let us know with a review, a like, a star rating, an email in, like I said, to info@trend-signal.com with podcast in the subject line, that'd be fantastic. Now, also this week, we've got a few live trading webinars this week that we're running. where we go through current live markets, we go through trading opportunities, and all that's going on with the markets, finding some opportunities, talking about trading strategy. And in fact, in these live events, we even teach one of our favorite trading strategies, where we teach through the 3 simple rules for identifying high quality turning points in the markets for foreign exchange, indices, and commodities. If you would like to come along, you'd be extremely welcome. Now, if you're watching this, you see the link on the screen there, but I'll read it out as well for those listening. That'll be bit.ly, so bit.ly/learnts, and you can register for a free place at one of our events this week. So that's bit.ly/learnts, bit.ly/learnts. Otherwise, everybody have a fantastic week's trading, and we'll look forward to hopefully seeing you at one of these events. Otherwise, we'll see you as ever next week for the podcast then. Have a great week. Bye-bye for now.